For more on our top line story and his outlook on markets now, we're joined by Rob Tetrault. Rob is Senior Investment Advisor and Senior Portfolio Manager at Tetrault Wealth Advisory Group at Canaccord Genuity. He's joining us this morning from Winnipeg. Rob, any quick thoughts on what you'll be looking for in the inflation release? Again, the consensus call from economists polled by Bloomberg, 5% during the month of April, 5% annualized from April last year to April this year, 0.4% during the month alone.
I think the 0.4% number, Paul, will be what we'll see. I think there's probably, if we break it down into three potential scenarios, kind of the number coming in line, so 5.1, that might be 45% likely in my mind. Something slightly above that in the 5.2 range or higher might be, let's say, 30% likely. And that would cause, I think, probably a 1 to 2% drop in the market. And then if we see anything with a 4 cap, anything with a 4.89, something like that, now you can expect to see a little bit of rally here. I think we like this short-term rally. And by the way, I don't think it's that meaningful, a 1 month number, but I do think the market will move because that's what the market does. It overreacts to news consistently all the time, even though the longer term trend is much more important. And we saw 9.1 as the top line number for inflation in June last year. That's 1 year ago. And now we've dropped it to somewhere around 5 in a year. That's not bad.
Okay, let's talk more broadly about your view of these markets as we look at the S&P 500 futures contract on an intraday basis, moving into negative territory at about 4 a.m. Eastern today. You call yourself modestly bullish on stock markets, Rob. Why so?
Well, I think I've always been modestly bullish. I think proper asset allocation is the key, and that means pretty much always having some exposure to stocks. Why wouldn't you, right? Over the last 100, 150 years, they've done well. Now, I'm going to break this down for you, Paul, and for the viewers in kind of 3 different pieces: short term, intermediate term, and then long term. And this is mostly technical work, and a lot of this is with Javed Mirza from our team at CG. He's unreal. But our view kind of short term, and I always caution traders and viewers and clients and friends not to look too much into short term. So this one you can kind of throw out the window, but since I'm on TV and I'm talking to you and the guests, let's talk about it. Short term, 2 to 4 week. We think a short term rally phase is potentially trying to take hold in equity markets. So this would take them above the April highs and target some kind of further resistance in the kind of 4,300 mark. So that's a 4% upside from here. I think if there's any weakness here, and this is a good tidbit for all of you guys, anytime there's weakness, feel free to use that to kind of enter, to leg in some cash if you have some, to rebalance anytime there's weakness. And we believe that's the case here. Maybe a 2 to 4 week rally here that could kind of see some upside into May, something like that for short term.
You do say you're bullish on the longer term, though. You think that equity markets are almost 7 months by your calculations into a new 4-year cycle.
Yes, so let's talk intermediate term now, and then I'll save the long term for last, Paul. But intermediate term, this is kind of 2 to 4 months. This is also tough to gauge because my dad always says you never know what the market will happen short term. If someone tells you they know what will happen short term, they're BSing you. Intermediate term, a little bit more stuff, a little bit more information coming out. So we think we're 7 months in. You said it, and I sent you a note on that this morning. In a 3 to 5 year kind of cyclical bull market, we think there's these 4-year cycles, and it's been historically done that. There's improving momentum, there's strength, there's breadth. I think the bearish investor sentiment and the put call ratios near neutral levels also cause some further support there for a rally into the 2 to 4 month period. I think this is kind of the early signs. Now, I know there's a ton of negative energy right now in the market. I know there's a ton of recession talk. I know there's a ton of that. This is more technical work, but remember, this is known. We know the market isn't surprising us with this potential recession that's coming, with this potential slowdown that's coming, which is why longer term we see upside as well in the 3 to 5 year.
What would it take to shift you off this bullish position in the intermediate and longer terms?
Well, I think the recent breakout over the December highs by the S&P and the TSX confirm a series of kind of higher highs and higher lows, I guess. And that's been in place since the low on October 13th. So I think this is the definition of an uptrend. We think there's bullish sector rotation. It supports our stance on the 4-year cycle. I believe that this 4-year cycle, again, most of this work is technical, but if you match it up with the macro stuff, I think this could last into 25, 26, kind of a 4-year cycle. Now, what would help? What would cause me to kind of change my mind? We'd have to see a multi-day close below December lows, maybe like a week close or a multi-week close below the December lows. And that would be a technical negative, and that would support kind of perhaps an intermediate correction, 2 to 4 month kind of downtrend taking hold. So that might test some further lows in the 38, 3,900, something like that. But like I said, overall, we think this is a longer term. We don't look that much short term. We like to have proper asset allocation. We like to own quality names. And if you're doing that, this potential cycle here for the next 3-4 years is a good time to make money.